Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, the markets, they keep this crack up boom going, right? They push into new record highs. There is a lot of complacency in this market. Nobody believes it can go down. I'm starting to believe it can't go down. As long as we stay above the 20-day, we're going to head higher. We'll see how this plays out. Now, I don't think it's going to end well. I was listening to one stock market analyst on YouTube, and he says, "Don't worry, be happy." And he's got a point, right? As long as we stay above the 20-day, nothing to worry about. We're going to keep going higher. Now, I do think at some point this is going to change. And when it changes, it could get real ugly real fast. Some things change overnight, right? Stock market can change overnight. We can drop in a heartbeat. But right now, crack up boom's continuing. We're continuing to go up. Before I forget, want to wish everybody a happy 4th of July. Get out there tomorrow. Enjoy the 4th. And let's get over to the real estate side of things. All right. So here's what's going on. Now talk about getting ugly. All right. So we got the real estate market, it's close to record highs, close to where Billy Bob got out at, but it's also now it's kind of flatlining, kind of struggling. A lot of sales going on. The volume is way down, and price usually follows volume, and that's going to be headed lower in my opinion. Now here's why. All right. So hardship withdrawals from a 401k, right? So people have their savings in the 401k, but they have to do hardship withdrawals, meaning they're desperate for money. All right, so this has spiked up 40% just in the last year. Now, since 2021, this number has doubled. There's been more and more people that have hardships that need to get their money out of their 401k. Now, the reason they're pulling the money out of the 401k is they're fighting to save their home. It's very sad right now. People don't have money. They're fighting to save their home. They're fighting to avoid eviction. They're fighting to avoid foreclosure. They're fighting, right? But what happens when they run out of money in their 401k? That's going to be very interesting. But the number of people that are doing emergency withdrawals has gone up 40% just in the last year. Now, keep in mind that this is taking place in the middle of an economic boom time, right? That's what they tell you. They tell you we're in an economic boom time. Now, me and you know that's not true, but okay, but this is happening during an economic boom time where people are forced to withdraw money to save their home. They're trying to save their home. Now, what happens when the bad times hit? What happens when a recession hits? It's going to get real ugly. You see, if you bought your home in the last 2 years, you cannot afford the payment anymore. You're doing these withdrawals from your 401k. Eventually, you're going to buckle under the pressure. You're going to end up putting the home back onto the marketplace. That's just how it's going to play out. So as prices start to go down. Now, a lot of people, there's two myths that people have wrong right now, in my opinion. Once again, all this stuff is just my opinion, and you're entitled to have your opinion. We don't need to agree on things, but if you're listening to the channel, obviously you might be interested in what my opinion is. Now, here's the thing that I think people get wrong. You see, as prices start to come down, they're starting to come down in many areas, people think that the buyers are going to jump back in and push the market back up. They're going to push the market higher. But here's the thing, where the buyers come in, it's really weird, and it's kind of backwards, right? The buyers, when they see the FOMO, when they see prices going up and up and up and up, that's when they want to jump in. Now, once they start seeing the prices to come down, the buyers no longer want to jump in. Once real estate gets on sale, the buyers, they go away. They get afraid. They think it's going lower. So once you start coming down, the buyers don't jump in to save the market. No, because then time's on their side, right? They can sit back and wait to see how low it's going. Now, when things are going up and up and up and up, they feel that time's not on their side. They're running out of houses, Tall Mike. I got to buy right now. And that's what they think because they got the FOMO going as prices go up. But when prices are coming down, they get a little bit afraid. They go, and and they don't buy. You see, I'm a real estate broker. I know this phenomenon. It's easy to get a buyer to buy. You better buy now because it's going higher. The FOMO's there, right? But when they're coming down, you better buy now. It might go lower. How do you push someone into the sale at that point? At that point, they got to sit on their hands. Now, right now, I would agree there's a lot of demand. You have an open house in my area, the big herd comes through. But that herd can disappear overnight. Things can change overnight. Once things start to come down, I believe they've started in most areas, have already started to come down, people get afraid because then time is on their side and they don't need to buy a property. They don't need to rush in. So they sit back and they wait. The herd goes away. The open houses become ghost towns. This is just from my experience. This is what I see in the real estate market. People buy on the way up. They sell on the way down. The sellers are going to be jumping over themselves to get out because they're having those hardship withdrawals, right? They are out of money. They have to get money from somewhere. Their 401ks are running out of money. They need to get money from somewhere and they can't get money. And as prices come down, they can't even get money out of their house because their equity is starting to get wiped out at a faster and faster pace. So they start to sit on their hands. They don't come in. So the myth that people are going to start to buy as soon as prices drop, no, that's not true. Not true at all. Here's the other myth I want to break. Okay, so everybody thinks the Fed's going to lower interest rates. They might, but that's not going to push the prices higher. People think as interest rates come down, prices are going to go higher. Look at interest rates went up. Did prices go lower? No, they kind of flatlined, right? They haven't gone lower yet, but they will. When are they going to go lower? They're going to go lower when they lower the interest rate. It's counterintuitive. I know people think when they lower the interest rate that prices are going to jump up, that there's going to be a stampede of buyers coming in to buy the houses because the interest rates are lower and affordability will be more easy. No, the Fed's lowering rates because something's wrong. Something's wrong in the economy. Something is going wrong. And that's called job losses. People are starting to lose their jobs. They're starting to get worried. So as the Fed lowers rates, you're going to see houses going down with the lower rates. It's counterintuitive. Mark my words. It's going to happen. Once again, this is just my take. You can believe what you want to believe. This is what I believe. I believe that's going to come down then. Now, the other myth, okay, myth number 3. Let's go with myth number 3. Well, but Mike, the investors are going to come in and buy all the properties on the cheap. Look at the investors are running for cover right now. They haven't been buyers for the last 6 months. They've been net sellers. They're the ones dumping the properties. They're getting out. They see the writing on the wall. Here's what they're seeing as an investor, right? They're seeing prices start to come down. What are they seeing going up? Their bills, their expenses, their property taxes, their maintenance, their insurance, their homeowners association, all the fees associated with the rental property are going up, but the prices are coming down. And guess what else is coming down? Rents are actually starting to drop. Why are rents dropping, Tall Mike? I thought the economy's booming. People can't afford the high rent. So they're having more vacancies. More vacancies on the market causes rents to go down. San Francisco, you can get some deals there now. There's a lot of vacancies. 3-4 months move-in bonuses, right? Don't pay rent for the next 3 or 4 months. Just move to our place because we're sitting vacant. Look, it's a problem out there right now. And the problem is starting to get bigger and bigger and bigger. You see, there's a lot of price distortion. When you print 35 trillion, 50 trillion, you print all this money, right? You get these price distortions. Now, price distortion. What's a price distortion, Tall Mike? Well, let me talk about that a little bit. All right, so I just sold this property, right? I mean, went almost $3 million, but it's a 1,200 square foot tract home that's 60 years old, right? That's price distortion. It's not worth it. Okay, look, we're in the biggest bubble in the history of, well, the United States is in the biggest real estate bubble ever. And you see, it's because we live in this crisis investment. Okay, everything's a crisis. We live in a crisis system. We had the big bubble, right? Well, the big bubble started to pop, all right? 2007, 2008, great financial crisis, right? Great financial Crisis. Everything's a crisis. What they do, they printed money to inflate the bubble bigger. Every time there's a crisis, print more money, bubble goes bigger. All right, what did we have just a year or two ago? We had the banking crisis, right? Silicon Valley Bank went down. FDIC didn't have the money, so what do? We print money, print money. We're going to print money to solve this banking crisis, right? Every time there's a new crisis, we only do one thing, and we print more money. And what does that do? It increases the size of the bubble. We're in a crisis system, right? Every crisis, we have to print more money. What do we have? We had a pandemic. What do we do? Well, we got to print more money. What did we print? We printed about $8 trillion. Crisis, print money, grow the bubble bigger. Crisis, print money, grow the bubble bigger. Crisis, print money, grow the bubble bigger. Now, how long can this go on, Tall Mike? Well, I don't know. Nobody knows exactly, but I'll tell you, when the final bubble does pop and they print money and it doesn't grow the bubble bigger, it's over, right? It's going to leave this big mess. It's going to be messy out there. I mean, there's a big mess, right? It's going to take us to the reset. What's the reset, Tall Mike? It's where your dollar goes away because it has zero value, and they're going to put you in this thing called the CBDC, a commercial bank digital currency, right? Okay, so they're going to put you in this digital currency to do away with the dollar. It's a reset. Maybe 1,000 of those dollars get you one of the digital currency, right? But it's a reset so they can reset the prices. So get rid of this price distortion. Okay, maybe that house I sold for $3 million is really worth $300,000. I'd say it's worth a little more than that. I'd say it's worth about $1 million, $1.5 million, right? That'd be about 50% haircut. Okay, so the price distortion gets corrected. Now, as the United States have the biggest price distortions? No, there's places that have bigger price distortions than we do. China has bigger price distortions. Sydney, Australia. Love Sydney, Australia. Beautiful place, right? Okay, they're selling houses there. They're $1 million plus homes, and they're selling them for 10 times your income. 10 times your income. It takes 60% of your income just to pay the mortgage on the home. 60% of your income to pay the mortgage on your home. But here's the thing. The cost of home ownership exceeds rent by 70%. This is a lot like my area, right? My area, the Bay Area. Okay, so what are we doing? We're getting up to almost 10 times income, right? Let's say you're making $300,000, you're going out there and you're trying to buy a $3 million property. That's 10 times income. Look, it's 1/3 the cost to rent a home in my area as it is to buy a home. Why would you buy a home? I really don't know. Doesn't make a lot of sense right now. A lot of people are going to get hurt, but it doesn't make a lot of sense. But these are the price distortions, that go on in a crisis economy. We go from crisis, we print trillions of dollars, then we grow the bubble bigger. A crisis, print trillions of dollars, grow the bubble bigger. That's the crisis system we live in. And we've been doing this, right? They say there's never going to be a recession. As soon as it looks like a recession will come, what do? We print the money, right? And we grow the bubble bigger. Eventually, this bubble's going to pop. You know it. I know it. Nobody knows exactly when. All I can tell you to do is prepare. And by preparing, I mean get some real money, get some gold and silver. It's going to save your butt when it happens. I'm telling you, this digital stuff all going away. Digital dollar going away. A lot of digital stuff's just going to become vapor. It was vapor to begin with. Be vapor again. Look it's going away. Get some real money. Money that has weight to it. Money that has ounces behind it. Yeah, that's what you want to do to protect yourself when this bubble finally pops. Because when the last bubble pops, it's going to be a big mess. Somebody's got to clean it up. They're going to try to do it with a reset. Don't turn in your real money yet. Not yet. The first reset never takes. They're going to have to do 2 or 3 of them. Now, it's interesting. In the United States, we've never, ever had a reset. But Mike, we got the reserve currency. Of course, we're never going to reset. Yes, we're going to reset. Your reserve currency is going to go to zero purchasing power. It's going to go away. It's already gone away, right? The only thing that's keeping it going is confidence. The fact that you'll take some of these dollars in form of payment. They don't have any value behind them. Cost 3 cents to print a dollar bill. Cost 3 cents to print a $100 bill. Why doesn't it cost, why does one cost the same amount, the dollar and the $100? Because they're not real, right? They're not real. Look, it's got to get back to real money. Real money is gold and silver. Gold and silver can save you when this thing pops. Now, can it keep going? Yeah, it can keep going. I hope it does. I hope we got 3 years left. I hope we got 5 years. I would really love to have 10 years left. The world is not going to be pretty when this goes away. When it pops, we live in a great world. But it is going to pop, and it's going to pop relatively soon. Nobody knows the day. Nobody knows the hour. But if you're prepared, it won't scare you as much because the pop is coming. If you like this stuff, give me the thumbs up. I'm Tall Mike. Get out there, everybody. Have a great 4th of July. Shoot off some fireworks or something. Do a little celebration dance. But first, give me the thumbs up. Bye-bye now.